All right. Good afternoon, everyone, and thank you for joining us. Hope you and your families are healthy and comfortable this October Tuesday. My name is Ian Port, and I'm the Senior Manager of Content at StreetEasy, which means I edit our market reports and the StreetEasy blog, among other things. I want to put in a quick plug for our blog. You'll find market reports, our latest housing data, and a ton of other great resources there, no matter where you are in the home buying journey. I'm coming to you today from my home in Washington Heights, Manhattan, for StreetEasy's first ever virtual home buyer seminar. Now, this is just one of a 4-part series, and every seminar we're doing this week is designed to answer your questions about one major step in the home buying journey. We encourage you to browse the event page agenda and join any of the sessions that will be helpful to you. We're going to get started today by setting a very important foundation, understanding the current market dynamics in New York City. Now, of course, with the pandemic, today's housing market is anything but normal. And over the next 45 minutes, we're going to talk about the current state of the NYC home sales market. Our economist, Nancy Wu, is going to walk through her latest research on the trends we're seeing. And the aim here today is really to give you a broader context for where home prices are at now, where they might be going in the future, where they've been, and other insights that are going to help you in your home search. Before I introduce Nancy, I want to make sure that you've noticed the Q&A icon at the bottom of your screen. This is what we're going to be using for live questions after Nancy's overview. Now, note that you can submit a question at any point using this feature, and we encourage you to upvote other people's questions. Let us know what's most interesting to you, what's most relevant. And of course, we're going to make sure to get to as many questions as we can in the allotted time. Another important point, this seminar and each of our seminars this week are going to be recorded and shared after all of the events. So you don't need to worry about taking frantic notes. This information isn't going anywhere. You'll have access to it once this is over. So don't worry about missing anything. All right. I want to introduce to you Nancy Wu, who is StreetEasy's economist. You might recognize Nancy from her frequent media appearances, speaking about her original research into the New York City housing market. Nancy is an expert on a variety of topics, including neighborhood and demographic trends, urban development, ultra-luxury markets, foreign demand, and of course, helping today's home buyers understand the New York City market. I want to welcome Nancy, and I will be back for the Q&A portion. Nancy, take it away.
Hi, everyone. I'm Nancy Wu. Thank you for attending, and thank you, Ian, for the introduction. I am an economist at StreetEasy, and I lead the research efforts in looking at all the data that comes on the rentals and sales market. So I live in the data day in and day out. We produce quarterly and monthly market reports that you can access every month on the blog to see where trends are, and I'm going to dig deep into those trends today. I'm always looking at different ways that this data is important for the real estate industry. So if you ever have any ideas, let me know, and be sure to drop in questions throughout this presentation if you have any questions you want to go over. It's a really exciting time to be both an economist and a buyer right now. The market is crazy and everything is changing so much since COVID. And buying a home is, of course, a huge challenge, and you guys are making the first step of being here today to learn about the market. And my goal here is to help you walk out with an idea of what the market is like in New York City across all different regions. So let's get started with the next slide and go into where the market currently is. So let's go to the previous slide. So this is a sense of where prices are on the market. So these are homes that closed in the last quarter, which is from June to September. So these are all closings that happened during COVID, during the summer. And these are the median closing prices that we're seeing across the boroughs. So when you're looking on the market, you might see prices that are above this or under this. This is the median closing price. So it gives you a sense of where prices are and how to negotiate. And of course, it'll be different by neighborhoods. And you can see the data for all of these different neighborhoods on our data dashboard page, which I'll also introduce in this next presentation. Next slide, please. So let's get a sense of where the market currently is. We're looking now at the year-over-year changes in prices on the market in Manhattan, Brooklyn, and Queens. So StreetEasy has a unique way of tracing prices that is different from the typical way that you see, which is looking at median prices over time. Looking at medians doesn't allow you to control for the type of homes that are on the market. So StreetEasy created a price index, which looks at repeat sales, the same home that comes onto the market twice, and how those prices change. And then we create an index of those in order to trace price changes over time. That allows us to control for the size of the apartment, the neighborhood, and all of these different features. So we can really get an accurate sense of where prices are going on the market. So we're looking at year over year changes here to get a sense of how prices have been growing or falling on the market. And I'll talk about these three boroughs in details. In Manhattan, we've seen that prices grew rapidly in the recovery of the Great Recession, raising by 10% year over year in 2013, 2014. And since then, it has begun to slow. Prices grew so quickly and so fast in Manhattan that it's been slowing down for the third year in a row now. From 2018 to now, prices have been adjusting in Manhattan. We've seen that prices have fallen by 4% year over year in Manhattan. And the slowdown has been continuing even through COVID, and it will continue for many months and years to come. So that's what's happening in Manhattan right now. In Brooklyn, prices rose rapidly a bit later than Manhattan. So Brooklyn prices peaked in 2015 and then began to slow in the same process that Manhattan has been, adjusting for how rapidly prices have been growing in the recovery. So now Brooklyn prices have been flat for the third year in a row now, going up and down. And there's actually a lot of demand in Brooklyn right now. So we'll get more into detail about that. And finally, Queens had the slowest recovery. So we saw that Queens prices peaked a bit later than Manhattan and Brooklyn. And Queens prices have been not slowing down as much, but it's still been relatively flat since COVID has hit the city. So let's talk about why this is and what is going on the market. Next slide, please. So looking at what choices you have on the market right now, for you guys, it's a really good time to be a buyer because inventory is at all-time highs in Brooklyn, Manhattan, and Queens. That means there are so many options to look into. And it also means that inventory levels are high, supply is high, and there's a lot of room to negotiate because sellers are competing against each other with so much supply on the market and not as many buyers. And we see this during COVID, there's something interesting happened where listings came off the market during the pandemic when it first started. And then since open houses open in July, listings have been going back onto the market rapidly. So we're seeing inventory rise every month since the summer, and that means more choices for buyers than ever. Next slide, please. So let's talk about pending sales. Pending sales are sales going into contract. So there has been a lot of buyer activity since COVID hit the city. And it's actually really interesting to see which areas are getting more sales, more closings than others. And as you see here, Brooklyn has had the highest pending sales on record. So there are a lot of buyers are interested in Brooklyn right now and making long-term commitments to stay there. And Brooklyn has had a lot of sales happening. And homes are going into contract in Manhattan and Queens as well, but not as rapidly as they have been in Brooklyn. So it is a good time. A lot of buyers are coming onto the market. When looking at the neighborhood level in terms of which areas had the most closings, in Brooklyn, it was areas like Park Slope, Bed-Stuy, Bay Ridge, and Sheepshead Bay. And the areas in Brooklyn that had the least pending sales were Williamsburg and downtown Brooklyn. And that's interesting because it shows that COVID has really changed the demand landscape of buyers in the city. So a lot of buyers are looking farther away where you can get a better deal and more space without having to commute into your offices every day, since remote work has really changed the landscape of New York City. So we're seeing a lot more demand for the neighborhoods that are farther away and less demand for buying in the areas that are adjacent to Manhattan. In Queens, we're seeing similar trends where pending sales were rising significantly in Forest Hills and dropped in Long Island City. So even though a lot of buyers, you guys might be considering going to the suburbs or living in Westchester or New Jersey, there are a lot of areas in New York City that have been doing really well, have a lot of options right now that are farther away, more single family homes and larger spaces for more affordable prices. So there are a lot of options in New York City as well. And finally, in Manhattan, pending sales have been flatter. And the highest areas in Manhattan that had the most demand this summer has been in Fide-Eye and Flatiron. So lots of good deals out there as well, and a lot of buyer interest coming onto the market. Next slide, please. So something interesting that's been happening on the market since the pandemic that has not happened before is that we're seeing record high discounts in Manhattan, Brooklyn, and Queens. A discount is when a listing on StreetEasy has a price cut. And in the past, especially in 2018 and 2019, we talked about how the Manhattan market has been weakening for a while. The sales market has been slowing down and prices have been adjusting downwards. And the thing is, in the past, even before the pandemic, we see the slowdown. We saw that inventory was at all-time highs, but sellers were not giving discounts to reflect the slowdown in the market. Sellers were waiting out COVID, thinking that prices will rise. But now sellers are actually reflecting the demand on the market and pricing accordingly by giving a lot of discounts and higher discounts to move properties off the market quicker. And that's actually a really good tool for you guys as buyers to know that sellers are willing to give discounts. We're seeing more sellers give discounts than ever. And that means it's a really good time to negotiate. It's really a buyer's market right now. Next slide, please. So looking at how quickly homes are coming off the market, we trace the median days on market that a home has been listed on StreetEasy. And we saw that now home sales are actually speeding up. Whereas median days on market used to be very long for Manhattan, Brooklyn, and Queens. Now with the discounts on the market and sellers willing to negotiate, we're seeing a lot faster home buying processes. So that means that if you see a home, it might go quicker than it usually does, but no worries because there's so many inventory out there and the sellers are willing to negotiate. And it's just a really, the market is just really different now from where it was before the pandemic in the sense that properties are moving, discounts are happening, and it has been a market that's been reflecting the demand on the market. Next slide. So there's a lot of neighborhoods in New York City, of course, and you guys might be looking across the areas. And speaking of where you can find negotiations, we looked into the neighborhoods across the city that had the biggest discounts. So if you look at this chart, we can see that the median discount for the highest median discount for the city was 11% in Midtown. That means if you found a home for about $1 million, you can actually get it down to just under 900K. And that's a good starting point to know like where you can negotiate and what is a good deal, what is happening on the market. Of course, this is happening across the city. So it's interesting that we're seeing record high median discounts across the city, not just in Manhattan, but also Jamaica, Queens, Dagger Heights, Elmhurst, Sunset Park, across the city. So lots of good deals. And most homes, 3 out of 4 homes are selling below ask. So in the past, we've seen that a lot of homes close above ask and there are bidding wars, but right now is a really good time to negotiate off the asking price. Next slide. So what are the takeaways here? There's a lot of changes on the market happening, and it's a really interesting time to look at the market. So for you guys, if you find a good option, make sure to negotiate. I've said this many times, but it's super important because right now buyers have more choices than ever and sellers are more willing to give discounts than ever. So it's a really good time to look into our data, find out what the median closing price was. We have data on the median sale to list price ratio, which is the ratio between the closing price and the asking price. So if that is about 10%, then you know what ballpark you can hit when you are negotiating with your seller. And it's really a good time to consider that, and especially to be informed and come in with good data for that. Next slide. So we talked about this as well. Remote work is going to significantly change the landscape of demand in New York City. We're already seeing Brooklyn have more pending sales than ever. And now with remote work being so common, people don't have to commute to the offices 3 to 4 days a week, 5 days a week. And it means that the premium of living in Manhattan will fall. So in the past, the trade-off for buyers has always been between affordability and commute time. Buyers were willing to pay more to stay in Manhattan for a shorter commute, but now you have so many options, not just in Manhattan, but across the city. And with remote work being more common, the entire city is open for buyers to look into. And as a result, we're seeing that even though prices in Manhattan have been falling by 4% year over year, they still have more room to fall. And the adjacent neighborhoods in Manhattan, such as downtown Brooklyn and Long Island City, where we haven't been seeing as many pending sales and lower demand, those areas have more room to fall in prices as well. So whether you're buying now or buying in the future and you're considering these neighborhoods, keep this in mind when you go to negotiate and tell like know that prices are likely to fall even more in these areas, so you can negotiate even higher. Next slide. So timing the market is a big question that we get a lot. So when is the best time to buy? It's ultimately a personal choice, and timing the market is a near impossible task, of course. So of course, buyers want to have the best return on investment. And something that we've researched in the past is that buyers who purchase at the height of the market tended to sell their homes at a loss more frequently. So the height of the market was before the Great Recession and in the peak of the recovery of the Great Recession between 2015 to 2017. We're no longer in the peak anymore. We've been in a market slowdown for 3 years. Prices have been adjusting. That means buying at a time that is not the peak of the market, it's a good time to buy right now or in the future. And this is something to keep in mind when trying to buy a house, to just know that right now we're not in the peak. Mortgage rates are at lows and there are more options than ever. So all of these factors can go into your consideration for when to buy a home. Next slide. So all of this data that I just presented, you can actually find them on our data dashboard. If you go to streeteasy.com/blog/data-dashboard, this is where you can play around with all the data. So all those trends that I just talked about on the sales market, median days on market, closing price, all of these areas you can find by borough, by neighborhood. So on this map chart, you can actually you can hover over the different neighborhoods and it'll show you the stat that you select. And it's really useful in the bottom when you scroll down. So this is the top of what you're seeing now is the top of the website. But if you scroll down more, when you're on the website, you can actually find, you can compare different neighborhoods, make different charts, and bring that to negotiations to your seller when you are looking at homes. So that is a great resource for you guys. It's all on the website. Also make sure to check out the blog. Next slide, please. So a last plug for the blog, we have all of our research here on the market, all of the market reports that we talked about and analysis. So make sure to check that out. And of course, if you want to stay in contact, follow me on Twitter and LinkedIn, and we can chat more about data and the market. And I'll turn it back over to Ian.
Great, thank you, Nancy, that was great. I want to encourage everyone to please submit your questions to the Q&A button at the bottom of the screen. Just type them in there and we will get to them. You can also upvote people's questions so we know what the most important questions to all of you are. So Nancy, thanks for walking us through the data. I want to kind of get started with a question that I think is probably on a lot of people's minds. It's kind of the million-dollar question is now a good time to buy? We've seen the market peak the market peaked in 2017. We've seen that COVID has kind of made things change a lot. Is this a good time to get into the market if you're a first-time buyer?
That is really the million-dollar question that we get all the time. And my answer is always that buying the time of the market, the best time to buy is ultimately a personal choice. If you want to buy now, like I presented, there's so many good options out there. There's a lot of negotiations willing to happen. It's a buyer's market right now. And mortgage rates are low. We're no longer at the peak of the market. So if you find a good deal, then right now is definitely a good time to buy. At the same time, if you can wait a few years, there's going to be more discounts in Manhattan, in the cities, in the areas adjacent to Manhattan. But of course, that's something that you can bring to negotiate now. Ultimately, the best time to buy is up to you. And as long as you find a good deal on the market, of course, there are plenty right now, then that could be a good chance to buy. But it's impossible to time the market. So I would say just don't consider that and just like look into the houses that you like and make sure to negotiate for that option.
So if someone's looking at buying now, but is worried that they're going to maybe look back next year and say, oh, I could have gotten the same place for, significantly less, you'd say, don't worry about it. It'll answer your needs now and it'll move on and it'll sort of work itself out.
I say the ultimate, if you're looking to maximize your return on investment, it's all about how long you stay in the home and what neighborhood you're looking into. So it's kind of like, ultimately the first thing you want to do is find a place to live and make sure you find the best place. But if you're looking for the best return on investment, then using our data, you can actually see like where trends are going. Like I mentioned, Manhattan prices have more room to fall, and that's something to consider when you are looking at homes in certain areas.
So Nancy, one question we're getting is, do we calculate discounts as the difference between the final sale price and the lasted list price, or the first listed price versus the last listed price?
StreetEasy's discounts are the difference between the first listing price and then the price that the seller proposes on the website. So these are discounts that we're seeing advertised. Of course, when looking at closing numbers, there can be even more negotiations off the market. So for example, even if you see a house on the market going from 800K reduced to 600K, you can still negotiate off the market for even more than that.
Thank you. One question too. A person is asking, why haven't prices in Manhattan dropped relative to the glut of inventory, all things being equal? We've seen a ton of inventory, prices have fallen, but not necessarily that much relative to how much inventory there is.
Manhattan has been in a slowdown for the third year, and it has more room to fall because we're seeing record levels of inventory on the market. This has been going on for a long time. There are so many new condos that were built when Manhattan was really hot in the peak of the recovery from the Great Recession. And now we're seeing that there are more than 5,000 units of new construction that have yet to be filled and yet to be constructed, but are proposed. We're seeing that a lot of new construction units, a lot of condos are empty. There's so many empty buildings right now. There's so much inventory. And with more and more people moving to Brooklyn and moving to the outer boroughs as a result of the commute time, we could really see that Manhattan prices will fall to be more in line with those of the outer boroughs. Because whereas before, buyers had the choice of looking across the market and choosing the premium of the commute time in Manhattan, now the entire city is open. Without having to commute, with remote work being an option, you can live anywhere in the city, and Manhattan's premium is going to go down ultimately. So sellers, of course, are unwilling to drop prices because in the past, there's always been a lot of demand to live in Manhattan. There's been a lot of foreign buyers who want to have a condo in Manhattan, and sellers know that they could potentially find someone who will pay above their asking price. And now sellers will have to adjust the reality that it is a slowdown in the market and prices have to drop even more in order to sell. And that's something that we're going to see come onto the market slowly. And it hasn't happened yet, but there's definitely more room for prices to fall.
Great. So speaking of those new development condos, we've seen a ton of them come onto the market. We've done research at StreetEasy showing that many of them have never been sold, even ones built going back as far as 2013. What's the long-term outlook for those? What's going to happen to all those new construction condos, do you think?
The new construction condos there's a glut of inventory right now. And we saw that in our past research that 1 in 4 condos in Manhattan have remained unsold. These new developments and condos are going to be hit the hardest. We're seeing that they haven't been negotiating much yet. The prices haven't dropped too much, but a lot of off-market negotiations will happen. These landlords, these owners of these buildings are losing a lot for not having their properties occupied. And that means if you are looking into a condo in Manhattan, and in particular, a new development condo, it's a really good time to negotiate a lot because these prices will be going down in the future. Otherwise, they will not be sold. There's so much inventory on the market in the high-end condo sector.
Great. And another question about those condos, what about the maintenance fees or the monthly fees on those? I mean, some people are saying they're pretty high, especially for newer ones. Do those ever come down? Are we expecting a change in those as the sort of market readjusts to this new reality?
We're going to have to see a change in those fees because maintenance fees and taxes especially can be so high, and a lot of buildings are currently giving opportunities to reduce not just the price, but also maintenance. And it's always a good option to negotiate on both when you come to your seller.
We've gotten a couple questions about property taxes. I wanted to ask you about that. Do you see a change coming to the way that New York City sort of arranges property taxes, change to the rates? Are they going to go up? Are they going to go down? What do you think?
That's hard to say. There's so many factors at play here and so much political uncertainty right now. And I would say that that's something that we'll have to wait and see in order past the election, past the pandemic recovery. It's going to be a really interesting time to watch the market. So that's something that we are still waiting to see.
Allison is asking, what sizes of apartments are moving the fastest or slowest?
It's interesting. I looked into what closings are happening. So what is actually selling during COVID, what kind of sizes of properties, studios, 1 bedrooms, co-ops, condos. And it was interesting because we actually didn't find any significant differences between what sizes of properties were selling. So initially, my hypothesis was that one bedrooms would be selling more than studios, three bedrooms, two bedrooms, because people are working from home, people are wanting more space. But in reality, across different bedroom sizes, there's been relatively equal demand and relatively equal closings. There hasn't been a significant difference. So it just means that there's a lot of opportunities right now, no matter what size you're looking for, and everyone is buying like across the sizes. It hasn't been a big difference.
Interesting. Um, would you recommend that buyers look at places that are maybe a little bit outside of their price range, but sort of with the goal or expectation of negotiating the price down? Is that a good strategy for looking at properties these days?
I think that's a great strategy. And when I'm looking at homes in Manhattan or in New York City, I'm doing the same where I adjust the price range to be about like 25 to 30% above what I would actually pay. And then, of course, there's no harm in looking at these properties and negotiating because, especially in areas where there hasn't been as much demand, you can really negotiate a lot. And even in the areas that are farther away that are experiencing some demand, they are more affordable prices. So it's a good chance no matter where you're looking and to always open up your searches to be more to have a bigger search range and then negotiate from there.
Great, thank you. One question about buyer's agents. Do you recommend that shoppers go to an open house or look at a property with their own buyer's agent and not deal exclusively with the seller's agent? Before I send that to you, Nancy, I do want to just remind everyone that we are having another seminar today at 4 p.m. with Triple Mint agent Aaron Seawood, who is an experienced agent here in NYC. He's going to answer a lot of questions about buying and what an agent can do for you and how the process works and all that. But Nancy, what's your take on using a buyer's agent versus going straight to the listing agent?
I would say it ultimately is up to you. And the most important thing is not what agent you use, but whether or not they are informed on the research. So any agents include and yourself, you should all like share the data, look into the data on StreetEasy, be informed of what the prices are, so that when someone says like, I've had experiences where agents will say that like this property is underpriced, and you can just check on StreetEasy that it's not. So as long as you have the data handy, you'll be prepared no matter what route you take.
Great. All right, here's a fun one, Nancy. I want you to get out your crystal ball and I want you to tell us your thoughts and predictions for the first 2 quarters of 2021, first half of next year. What do you think is going to happen to the market?
My crystal ball has been telling me that the market is going to be extremely interesting. It's going to continue to slow down, in my opinion, especially in areas of Manhattan. We're going to see a really dramatic landscape change in demand across the city. So we're going to see more demand in places like Brooklyn. Right now, we're already seeing so many more sales happening in Brooklyn than ever. And New Yorkers who are planning on staying in the city permanently for the long term, they're looking into areas that are farther away from the city. Like the most pending sales are happening in Bay Ridge and Sheepshead Bay, and the least are happening in downtown Brooklyn. So I expect these trends to continue. I expect that the condos, especially in Manhattan, will continue to fall in prices. They have much more room to fall. I expect that there'll be a shift in demand across the city so that we're having more people moving outside of Manhattan. And as Manhattan prices begin to lower, we can see more of a diverse population moving into Manhattan. So the city is going to look really different. And the next 2 quarters in 2021 is when we're going to see that change begin to slowly happen.
Yeah, it's a lot. Change is going to continue. That's one thing we can probably all count on. Let's talk a little bit about what sort of features buyers are looking for in this market. We have a question about units with balconies or outdoor space and how much of a premium that might bring to the price, or how much that might, let's say, change the negotiability if you're on the buy side. What do you think is the price premium for outdoor space or a balcony, and how should buyers think about it as well?
So I did do an analysis looking at how much different amenity buildings versus non-amenity buildings add. And what's interesting is that the amenities, we're not seeing much of a premium. So we're not seeing the outdoor spaces adding to the price of the home, because a lot of homes with outdoor space tend to be already in the more affordable areas across the city where you have that option for outdoor space. What's actually happening is that the buildings with the amenities that are shared, like pools and gyms and rooftop decks, the luxury buildings with the amenities that you can't access during COVID, those properties have been falling in prices faster. we're not seeing that the properties with the balconies are increasing in prices, but we are seeing a lot more demand going into areas that tend to have more properties with balconies. And of course, when we're looking at StreetEasy's user search data, been a skyrocketed search for units with outdoor space, with balconies, with just larger square footage. So there's been a lot of interest in just having a more comfortable place to work in when you're working from home.
Makes sense. So what about seasonality in the market? I know this is something we've looked at a lot. Is it better to search for a home in the spring or summer versus the winter? Does it make a difference? Has COVID changed that?
COVID has really changed seasonality in the market. So we know in the past that the peak buyer season has been in the spring and then in the fall. So people aren't really looking in the winter. Inventory is coming off the market because no one wants to sell during the time when it's really cold to go outside, when people are leaving for the holidays. Same in the summer when no one's really in the city and going outside. But usually we see a peak buying in the spring. That's when we have the most inventory and the most buyers and the least discounts. And then in the summer and in the winter, during lower seasons, we see more discounts and fewer buyer interest. This year, everything has really flipped on its head. So in the spring, everything paused. No one was buying because we were all in lockdown, and inventory came off the market because sellers had no point of putting them up when people weren't looking. And then when the summer hit, inventory rapidly came onto the market. And this summer, we're actually seeing more demand. So there's been a skyrocketing sales in Brooklyn this summer, which is not something that we typically see in the summer. We're going to see this pent-up demand continue through the year. I wouldn't be surprised to see a lot of sales happening in the winter time this year, in a time when it's typically not a hot buyer's market. But I expect that because there's so much been pent-up demand and so much properties on the market with really great deals, that we're going to see less seasonality and more demand throughout the year relatively flatly. So that's going to be interesting to watch out for in the following years and see how seasonality trends have changed since COVID has hit the city.
Wow, yeah, if there's high demand for buying all year round, that would really be a big change from the typical New York market. There's a great question here from Jamie about inventory levels of affordable housing in Manhattan, more affordable housing. Is the inventory glut really among hyper-lux properties, or is there increased inventory at all price levels?
There's been increased inventory at all price levels. Of course, there's a glut on the high-end luxury, and those prices will have to come down. But there's been so much inventory across the market. The thing to know is that the more affordable options are coming off the market faster, and the discounts are lower because you're already getting a better price. So it's less likely that you'll be able to negotiate 10% off the asking price. But there's so much demand across price ranges, and we are seeing that there's a lot of properties across the city and across price ranges.
All right, and perennial question about Greenwich Village, West Village. Are we seeing discounts there now? Are we seeing price changes in these hot neighborhoods of downtown Manhattan that everyone loves, West Village, Greenwich Village?
We are seeing so many discounts across Manhattan. The more popular the neighborhoods have been in the past, the more expensive, the more discounts we're seeing. So West Village, Greenwich Village are having huge discounts. Those are small apartments that are priced purely because of the location and the commute time. You can walk to work in those areas. And these places, as a result, have been going down in prices. Across Manhattan, there's been huge discounts, and it's a great time to negotiate. If you're looking into the West Village and Greenwich Village, and these were unaffordable options before, you can consider them now because there's so much negotiating power.
Interesting. And what about foreclosures in Manhattan? Have we seen an increase in those, and how's that sort of shaping the market?
We haven't been tracing foreclosure data, but that's something that we can look into. I expect to see a big increase, especially with unemployment in New York City hitting 20% in the summer. That's a really huge change that's impacting a lot of small business owners, a lot of homeowners, and I wouldn't be surprised to see an increase in foreclosures across the city.
All right, and we've talked a fair bit about new development condos, but what about co-op prices? Are the trends there divergent from the condo market? What's going on in co-ops? What should people look for there?
So I looked into the difference between closings in co-ops and condos, and they've been fairly similar. So prices have been falling across co-ops and condos during the pandemic because there's a glut of inventory for both. And there's been fairly similar closings for both and negotiations. So it's interesting because right now we're not seeing too much of a difference across different housing types.
Got it. I want to ask you for your thoughts on the kind of like long-term outlook for Manhattan and New York City generally. I mean, obviously this is a big open question right now. Lots of people kind of making predictions, making assumptions. What do you see as the kind of long-term viability of residential real estate in Manhattan and New York City generally?
Ooh, this is super interesting. There's so much changes waiting to happen right now. We're seeing with the remote work and with the future economic crises to come, there's going to be a huge change in what the city looks like. I expect to see a lot more people who are originally looking at Manhattan to look outside and to have Manhattan prices go down eventually and have more people move into Manhattan. So prices will fairly equalize if they go according to market trends. And of course, a lot of New Yorkers who were planning to move to the suburbs originally have been expediting their process to move out now and take advantage of the low mortgage rates. So we're going to see a lower population. We've already seen a lot of people leave the city. And until the economy opens up again, until the pandemic is over and we have employment numbers going back to normal, we're going to see a decreased population in Manhattan, in New York City, across the city. And that is going to be that's going to alter New York City a lot without that chunk of population. So until jobs come back, until people start coming back to the city to work here or to go into their offices, it's really going to change the landscape. We're going to see, I expect to see a lower population for the foreseeable, for the midterm future. And there's also a lot of economic risks ahead. Right now, it's so much political uncertainty about what's going to happen with the missed rent payments and landlords missing their mortgages because they're not receiving rents. That's all impacting the credit markets, and the credit markets are central in New York City and Manhattan. So there's a lot of risks to come that are still up in the air due to policies. So there's a lot to change, and any changes that happen that occur nationally could really significantly impact New York City because we're the center of the financial institutions. So something to look ahead. And depending on how big or intensive a recession is coming up, that's really going to alter New York City. But of course, so speaking in the far long term, New York City always recovers. New York City recovered from the Great Recession to be bigger than ever, have more people than ever, and have a booming economy. So in the long term, New York will recover. But in the next year or two, we're going to see some big changes.
Great, thank you. I want to get in a few more questions in time. We have someone asking about selling in this kind of interesting market and then buying in the market, and sort of, is it a wash if you end up selling your place maybe at a lower value than it would have gotten, let's say a year or two ago, and then you end up buying a place at a lower value? Is there any sort of issue there or thing to be avoided? Is it a wash?
So in terms of selling right now, we did some research into what sellers were making. And a lot of sellers were selling at a huge gain if you're selling it right now. Prices have been dropping, yes, but they haven't been dropping as significantly as they should be according to the level of inventory on the market. So supply right now is much higher than demand. That means prices have more room to fall. So selling right now can be cutting your losses for the future if you expect prices to fall even more. Ultimately, you can look into the location, see the trends there, and it's going to be different if you're selling in Sheepshead Bay where there's a lot of demand versus if you're selling in Midtown where there's less demand. So it really depends on the location and the trends over time. You can kind of estimate where trends will be based on, for example, if you look into our data dashboard, for example, if you're selling in Midtown, you see that inventory is high in Midtown and discounts are high and there hasn't been a lot of pending sales. That means demand is low. That means prices will fall. You can look into another neighborhood where inventory is lower and there's been a lot of buying activity. That means prices are likely to grow. So using economic tools, you can figure out where prices will be moving in your neighborhood. And of course, from an economic perspective, timing the market, again, is going to be difficult. If you need to sell now, sell now. Like you can look into trends if you're still deciding, but ultimately it's a personal choice.
Okay, great. And what about townhouses? Are prices there falling in a similar pattern with apartments?
Yeah, we're seeing similar trends across housing types. So There has been some falling prices in townhouses. There has been a lot of pending sales in townhouses as well because of more demand for greater space. But because of how high prices were and how the sales market has been slowing down, we're seeing prices fall across the city, across housing types. Prices are falling more in areas like Manhattan and in condos, but ultimately it's falling across the market.
Okay, we're coming down to the wire here. So lightning round. What happens when tax abatements end? These are our discounts on condo property taxes. Nancy, what happens when they end?
We're going to see even less demand for these apartments, and as a result, the sellers are going to have to lower prices significantly. There's going to be a lot more negotiations in order to keep the prices similarly to what people would have with the abatements. So, I mean, looking into market trends, it looks like these houses are going to have even more discounts and even more negotiability.
And for the individual property owner, when the abatement ends, their property tax bill goes up, sometimes significantly, correct?
Yes.
And is there a way to find out how much it's going to go up before the abatement ends?
I'm not exactly sure about that, but we can definitely look into it.
I think we have an answer to this question on our blog, which we can connect you with. Okay. Do you see a difference between larger apartment buildings versus smaller buildings since COVID? So changes in demand, pricing, et cetera, between people wanting bigger versus smaller apartment buildings?
Oh, that's an interesting question. We see that there's been more demand in smaller buildings versus larger buildings. And I don't think it has to do with the building size as much as it does with the building amenities. So larger buildings typically have amenities like pools and gyms. They tend to be more expensive and have lower demand because there's so many units available right now. So we're seeing a lot more demand for smaller buildings because people don't want to pay that premium of those gyms and amenities that they can't use during COVID. But of course, in the long term, it's not going to matter when COVID is over. So I would say to think about the long term when you're buying, and we are seeing lower demand for larger buildings right now, but that's not necessarily a trend that will be in the long term.
Great, thank you. Okay, well, last question. Can you talk a little bit about what's going to happen to mortgage rates? I want to get into your take, Nancy, and for everyone watching, I also want to make sure you know we're doing an event Thursday at 2 p.m. Eastern with a local New York City mortgage broker, Tony Zhao. He's excellent. He can answer your questions about mortgage rates in great detail. But Nancy, let's hear your take on what's going to happen with mortgage rates in the near future.
Mortgage rates are at record lows right now, and they're going to continue to be low as the government wants to stimulate more buying, more purchases, more consumer spending, and lower mortgage rates is going to be a trend that will continue for at least the near term.
Okay, great. Thank you, Nancy. Thank you, everyone, for coming. Unfortunately, we are out of time. I hope we answered a lot of your questions and you all feel a little bit more knowledgeable and empowered about the home buying process here in New York City. I do want to make a quick plug for our next seminar. It's happening today in a little over 1 hour at 4 p.m. Eastern. We're going to be talking to local agent Aaron Seawood for more on the process of buying a home in New York City. Aaron's going to cover the kind of timeline, how successful buyers search, tour, and even put in an offer in this kind of weird time of COVID-19. So for a real inside look at the buying journey, the buying process, come join us in an hour with Aaron. You can use the same Zoom link you received in your confirmation email. So just click right in and join us. Thank you again, Nancy, and thank you everyone for joining us today. Have a great week and stay safe out there. Thank you.